Hi guys, welcome to my channel again. This is just a video to show you how to use moving average. Alright, so there's many ways of using moving averages, but this is just a way. This is one of the perfect ways to use moving average. Here I'm gonna use let me just show you which indicators I'm using. I'm just using a moving average period 233, simple, high, and the next one same settings, 233, simple, low, right? So I have a moving average high and low. So this is just to filter the trend, right? So when the market is below this, I can call it a band, right? We can call it a band or a channel, depend on you. But as long as the market is below this, we're gonna only take the sell options, right? And if the market is above, we're gonna take the buy options. All right, we're gonna go backward. Let me just go. Let me pick any date. As you can see, all right, let's go as far as this, right? Let's take this new trend here, right? So let's say for example we start here, right? You can see the market was up there. Let's start somewhere here, right? So the first thing I do is this, because remember, when the market is below here, I'm only gonna sell, and when it's above, I'm only gonna buy. So I'm gonna use sorry for that, I'm gonna make use of trend lines, right? Trend lines. Okay, let me take this one, right? When you hear, what I can see is this, right? So let's say we start trading from here. From the first day you start trading, the market is here. This is a new day, right? On the 3rd of September, you start trading. So I'm looking at this. Okay, what happened previously? Okay, this was a trend. The trend is broken here. There's now a new trend. So I take the two last point there, the highest points there, to confirm that the market is now going down, right? So I'm gonna have that here. So I'm only gonna place a trade when the market touch that line to go down, right? But now the thing is, around here it's touched, but it's above this band, so I'm not gonna take it. And the market comes and break it, so it creates a new trend. So I'm gonna take again same thing, the two lowest points. I have this one and this one, right? So now when the market breaks here, okay, I'm waiting for the market to retrace back to this is my new trend line. The market comes and retrace here, it's touched this, and notice what happened here, it is above this band. So at the moment the market touched it, the first candle, the first bullish candle here, that is going to be my entry point. So this is going to be my entry point. So I'm gonna buy there, and my stop loss, notice where I put my stop loss. I'm gonna put my stop loss here at this level, at the band, right? You can put your stop loss at the band, or if you want, depending on your money management, you have to put your stop loss just below that candle there, right, where the reversal was spotted. And now, so my entry will be at the closing of that candle, that bullish candle. Now in terms of my profit, that depends on you. You can go for a ratio of 1:1. That means you calculate your stop loss. If let's say your stop loss here is around 20 pips, you're gonna go for 20 pips one. Or if you wanna go for a ratio of 1:2, you can go for 40 pips. But what I suggest is that you leave the take profit, you just use a trailing, right? If you don't know what's trailing, please comment below. I will explain to you. I will send you some notes to explain to you how to do a trailing stop. That means when the market move by one, based on the stop loss, market move by one, you move your stop loss to the entry. And as the market is moving, because you can see from here, as you take this,